Ladies and gentlemen, welcome to the fourth lecture of this lecture series. Now, in this lecture, we'll talk about the relationship between economics and ethics. Remember in lecture 2, when we define economics, we quoted the Book of Change and said that administering wealth, formulating rules, and prohibiting the people from doing wrong, this is called justice. So the part of formulating rules refers to the people's ethical life. Economics and ethics are very closely related. Not only are they related, but they're in perfect harmony with each other. Much of the conventional economics and finance study focus a lot on the rate of return and monetary valuation. Well, this is arguably the right thing to do because the purpose of a company is to make money for their shareholders. But oftentimes, when it comes to ethics, it is usually treated as what we call it a non-economical item. I mean, you can imagine the income statement of a company, right? Things such as corporate social responsibility is usually classified as a cost item, which reduces profit. Now, it's true, the majority of items that result in money outflow are indeed costs, but not all of them. For example, capital expenditure on machinery or a factory and plants are not classified as immediate cost, but are accounted as investment. Investment is different from cost. So the amount of investment is then depreciated over a period of several years with the purpose of reflecting the long-term contribution to the company's operation. So from a pure accounting perspective, writing off capital expenditure and investment items as costs can be quite misleading because it masks the fact that capital goods bring benefit to the company over the long term. In addition, from a financial analysis perspective, any money outflow must be accompanied with a rate of return figure. So for immediate cost items such as inventory and raw material, people look at the gross profit ratio or the markup, right? And for large expenditure, people look at for things like factory and merger and acquisition, people calculate the corresponding rate of return in order to appraise the viability of such investment. Well, so regardless of whether it is for short-term or long-term, I guess any item resulting in money outflow is always scrutinized based on a cost-benefit analysis. So in layman's term, we can say that don't do it unless it's worth it. Now, what about the rate of return on ethical conduct? Interesting question, I would say. But also, I think it's very difficult to estimate with any degree of accuracy. For example, what is the impact on profitability if a paper company spent £1 million to fix the pollution problem caused by its paper production? Where do we start? Well, you can look at the positive impact on reputation, perhaps, and you can think about how is that translated into customer recognition, consumer recognition, and revenue increase. The calculation is arbitrary and inaccurate at best. So, in this example, while the money outflow is clear as crystal, the potential financial benefit is nothing more than a guess or an estimate. And because companies can't make investment decisions based on inaccurate estimate, the company is unlikely to spend any money to deal with pollution issue unless required by industry regulator or pressured by the public. So Corporate ethical conduct usually ends up as a pure cost item on the income statement without quantifiable benefit. And it seems that there is a trade-off to be made between ethics and economics. Now, this is not only the case for a company, but also often found in economic management of a country and individual life. On the one hand, ethics is a seemingly spiritual issue without form. But on the other hand, economics and profit is quantitative, scientific, and based on model simulation. So how is it that ethics and economics are harmonious with each other? So to answer this question, in this lecture, we'll first establish a firm understanding of the concept of ethics. And then we'll explain how the sages fuse ethics with economic management together, as well as governance. And then we'll discuss how ethics can act as a source of economic prosperity based on the traditional Chinese culture. Not a cost, but a source of prosperity. And lastly, we'll study how the ancient sages make choices when the conflict between ethics and economics becomes inevitable.